Yo, tax warriors, the 2024 tax season is knocking at your door like the beat in your favorite track. Get ready because as of January 29th, the IRS has been open for business, accepting and processing tax returns for the wild ride that was 2023. Hold on to your W-2s and get those calculators out, because this year we've got some rule changes that might just groove your way. We're talking higher standard deductions, expanded tax brackets, and a remix on business deductions. Let's dive into the tax mix. Now, when you're in the tax game, you've got choices. Claim that standard deduction set by the IRS, or go full-on maestro and itemize your deductions. Spoiler alert, 90% of us are jamming to that standard deduction beat. Get this, for the 2023 tax returns hitting the scene in 2024, the standard deduction amounts are cranked up. That means one thing, lower taxes, baby. Check out the following updated amounts for 2024 and for our seasoned players. If you're 65 and older or rocking the blindfold, grab that extra standard deduction. $1,050 for singles and $1,500 for the power couples. But hey, if you're the Mozart of deductions, itemize away. Mortgage interest, charity vibes, state and local taxes, it's your deduction symphony. Now, let's talk about how the IRS is throwing some extra flavor into the mix. They've expanded the income tax brackets. Yup, you heard it right. It's like they're remixing the tax melody for 2023. So, what's the deal? Well, these bracket changes are all about making your tax bill a little lighter. It's like getting a VIP pass to the tax club. Let's break it down with a real-life scenario. Picture this, a single taxpayer with $44,000 in taxable income for 2023. Now, under the new groove, they're dancing to a sweet 12% marginal tax rate. Now, rewind to 2022, same income, different story. Back then, they would have been bumping to a top tax rate of 22%. That's a 10% drop in the tax beats, my friends. Imagine what you could do with that extra cheddar in your pocket. It's not a magic trick, it's just the IRS bringing a little more groove to your financial dance floor. Now, let's talk about a plot twist in the tax saga. There were supposed to be new rules in town, especially for those hustling through payment apps. But guess what? The IRS decided to hit the pause button, and here's the scoop. Enter the American Rescue Plan of 2021. It brought changes to the game, specifically to the reporting requirements for transactions on payment apps, those handy third-party processors we all know and love. Before the rescue plan, you'd get a Form 1099-K if you received $20,000 or more and had 200 or more transactions. But then came the remix. The ARP lowered the bar to $600 or more. Here's the kicker. This change was supposed to hit the stage this tax season. However, the IRS sensed some confusion in the crowd, taxpayers and processors scratching their heads over the new rules. So, they decided to hit rewind. Welcome to 2023, a transitional period, a calm before the storm. The IRS is keeping it old school, requiring Form 1099-Ks only for those pulling in $20,000 with 200-plus transactions. But hold on to your hats, because 2024 is when the beat changes. The IRS will ramp up the reporting threshold to $5,000 or more on Form 1099-K. That means bigger transactions are getting the spotlight. Taxpayers, get ready for a new groove in 2024. You'll be receiving those 1099-K forms in January 2025, outlining the larger transactions that went down in the payment app arena. Now, let's zoom into the business realm because for all you entrepreneurs out there, there's a new rhythm in town. Get ready for changes that'll have your business deductions dancing to a different tune. First up on the business docket, business meals. Remember those pandemic perks where you could write off 100% of your restaurant rendezvous? Well, it's a curtain call for that provision. In 2023, deductions for business-related meals and drinks are back to the 20-20 beat, only 50% deductible. Now, let's hit the road. Literally. Small business owners, buckle up. If you're using your ride for business, the IRS is giving you a boost. You can now claim 65.5 cents per mile driven during the 2023 tax year. That's a 3-cent upgrade from the 2022 groove. Hold on tight, business owners, because the bonus depreciation roller coaster is in town. Thanks to the Tax Cuts and Jobs Act, TCJA, you've been enjoying writing off a chunk of those shiny new assets. But here's the twist. For assets placed in service in 2023, the bonus depreciation party is taking a step down each year. Starting as of last year, 2023, bonus depreciation was at 80%, but it'll gradually dip out completely by 2027. Yup, zero, zilch, nada. So, business maestros, these changes are setting the tone for the 2024 tax season. Whether you're filing your personal beats or the business bangers, these shifts matter. Stay in the loop, know the tunes, and make those deductions dance to your financial rhythm. If you're vibing with these updates, you should also check out our other video on how to avoid taxes legally. So hit that subscribe button, drop a comment on your tax strategies, and let's keep the financial groove alive. This is your tax maestro signing off. Until next time, stay tax-wise.